I know a lot of people, even people much smarter than me, they've been talking about silver, the value there. We're getting much closer to that point where it's really going to rip and roar. If we exclude the breakout of commodity prices in 1971, 72, if we exclude that, then silver breaking above 50 will be the biggest breakout.
You're watching Silver News Daily. Subscribe for more.
Silver miners are the hidden opportunity in this bull market. And when silver surges, these stocks don't just rise, they explode. In past silver bull runs, mining stocks have offered some of the most spectacular gains, often outpacing the metal itself by a factor of 5 or more. Let's look at history. In the 1970s silver bull market, some silver mining stocks rose by over 1,000%. During the 2000s gold and silver boom, silver miners like First Majestic and Pan American Silver multiplied in value several times over. And in 2011, as silver approached $50, many silver stocks saw 300–500% gains in just a few years. Why? Because miners act as a leveraged play on the price of silver. When silver rises, their profit margins explode and investors rush in, sending their stock prices soaring. And right now, the setup for silver miners is stronger than ever. Many mining companies have been operating under tight margins for years due to suppressed silver prices. But with silver's breakout looming, those same companies are on the verge of massive profitability. Even a modest rise in silver prices can mean exponential earnings growth for miners. And when silver surges past 50 and beyond, these stocks could go parabolic. But here's what makes this opportunity even bigger: the lack of new silver discoveries. Unlike past bull markets where new mines were being developed, today's silver supply is shrinking. Major mining companies have been underinvesting in new projects for years, meaning there's less silver coming into the market just as demand is exploding. This creates a perfect storm where silver prices surge, miners struggle to keep up, and their stock prices skyrocket as a result. This isn't speculation. It's a pattern that has repeated every time silver has gone on a major bull run. And right now, we're on the verge of what could be the biggest silver rally in history. But timing is everything. The market hasn't woken up yet. Institutional money is just starting to move in. And once silver clears critical resistance levels, the rush into mining stocks will begin. So the real question is, why now? Why is this moment different from past silver cycles? The answer lies in a combination of macro forces, technical signals, and institutional shifts that are aligning right now.
Well, there's a couple things. And this is really fortuitous timing that we're doing this right now. I mean, because we're seeing, which I'll get to, we're seeing gold is now breaking out against my 60/40 portfolio indicator. Gold is also breaking out against the stock market, the S&P 500. If you look at that chart, it's coming out of a 4-year base. So we have a confirmed daily breakout. Now, as of today, we have a confirmed weekly breakout. We still don't have a monthly breakout, but I think we're probably going to get that monthly breakout by the end of the month. And so when you look historically, you take a 50,000-foot view, typically gold and hard assets, they alternate between secular bears and bulls with the stock market. So when the stock market is in a bull, gold is usually in a bear, and vice versa. I mean, now, if you go back to the 1940s, there was a bit of overlap. There was a bit of overlap in the 1960s, and we have seen some overlap in the last 5 or 6 years or so. So that's not uncommon, but for the most part, gold and hard assets, they do best when the secular bull in the stock market ends. And so that has technically, that's not ended yet. Maybe the peak that the stock market put in a couple months ago or a month ago, maybe that's the end of it. I don't know. Maybe it has one more run to a new high in the next year or so. Like maybe that ends up being the peak. So the stock market rolling over and falling below its 40-month moving average, that's one of my indicators that confirms when the stock market is in a secular bear. Now, the problem with that is that usually happens a year after the market peaks. So it's going to take some time for that indicator to be ticked. But we already have gold breaking out of a 13-year cup and handle, which it did last year. And so that was really significant by itself. Now, even more important, as I said just a moment ago, we are seeing gold break out against the stock market and my 60/40 portfolio indicator. And so I have historical data. I compiled it going back 100 years or so. And 60% of that basket is the total return for stocks, 40% is the total return for bonds. And that chart, gold against the 64.
Timing is everything in investing, and right now all the signals are aligning for silver's biggest breakout yet. The question isn't just whether silver will surge past $50, it's why now? What makes this moment different from past silver cycles? The answer lies in a perfect storm of macroeconomic forces, technical signals, and institutional shifts that are all converging at the same time. First, we have gold leading the way. Every major silver bull market in history has been preceded by a strong gold breakout, and that's exactly what we're seeing now. Gold has already shattered key resistance levels, confirming its uptrend, and silver is following the exact same setup that has historically led to its most explosive moves. Second, there's the collapse of confidence in traditional assets. Stocks are struggling, bonds are underperforming, and fiat currencies are losing purchasing power faster than ever before. Investors aren't just looking for returns anymore, they're looking for safety. That's why central banks have been accumulating gold at record levels. And as institutional investors follow suit, silver will inevitably benefit from the same trend. Third, we have industrial demand hitting record highs. Unlike past silver bull markets that were driven mostly by investor speculation, this time there's a real, unstoppable demand from industries that can't function without silver. Solar panels, electric vehicles, 5G technology, these sectors are devouring silver at a pace that mining supply can't keep up with. This isn't a short-term trend. It's a long-term shift that will keep silver prices elevated for years to come. Then there's the technical picture, which is screaming for a breakout. Silver has been trapped in a range for over a decade, but now it's on the verge of breaking through multi-year resistance levels. The moment silver clears $35 and then $50, we could see a move that happens so fast, most investors won't have time to react. And finally, there's institutional interest waking up. For years, silver has been ignored by Wall Street, left to retail investors and small-scale traders. But that's changing. Hedge funds, family offices, and sovereign wealth funds are starting to move in. And when big money flows into a tiny market like silver, the results can be extreme. We are standing at a moment where everything is lining up. The setup is bigger than 1980, bigger than 2011, bigger than anything silver has seen before. And once it moves, it won't be a slow climb. It will be a historic surge. But there's one final piece of the puzzle: the technical breakout that will trigger the biggest rally silver has ever seen. Once silver clears its final resistance, there will be no turning back.
Set over a century of data that's the best indicator to define the secular trend in bonds. But that being said, there have been some periods where bonds, so they alternate, like they can be in a secular bull right alongside gold at the same time. And examples of that are the 1930s. Again, price of gold was fixed, but if you look at the gold stocks, they performed fabulously well from 29 to 37. So that was a period where you made money in bonds and stocks. And also the 2000 to 2011 bull in precious metals is also a secular bull in bonds. So bonds can go both ways with gold. But what we are seeing with respect to bonds is really significant, because in the last 100 years, up until COVID, 1920 to 2020, the only period bonds were in a secular bear was 1965 to 1982. So there's not a lot of history with respect to bonds in secular bears. Again, in that 100-year period, there was only 17 years where the trend was down for long-term bond prices, and the trend was up for higher rates. So, and we know that during that period, of course, I mentioned the gold stocks performed fabulously well, and then eventually commodities in the 70s, they went much, much higher. They went crazy. And so the 60s and the 70s is the best comparison for what we're going into, because that was a point when stocks and bonds were both in secular bears. So the two competitors to gold and hard assets they were in secular bears at the same time. So that's the only other time that happened. Again, if you look at the 1930s and the 2000s, secular bull in precious metals, but also a secular bull in bonds. So now, once this secular bull in the stock market ends, you're going to have a secular bear in both stocks and bonds. So that's even more powerful for gold and hard assets, because you don't just have capital from bonds moving into gold, which we've seen the last few years. Now you're going to have capital from stocks moving into gold. So that's what's going to make this bull market more similar to the 70s than during the other periods, which was way more explosive than the other periods.
The technical setup for silver is reaching a critical inflection point, and once the final resistance is broken, there will be no turning back. Silver has been suppressed for over a decade, but the moment it clears key price levels, the move to $100 could happen faster than anyone expects. Right now, silver is testing multi-year resistance around 30. This price level has acted as a ceiling since the 2011 highs, with every rally being turned back before it could truly break out. But this time, things are different. The forces driving silver are stronger than ever, and the pressure is building to a point where suppression will no longer hold. Historically, silver's most explosive moves have always started with a technical breakout. In 2010-2011, silver broke above long-term resistance around $20, and within months, it had rocketed to nearly $50. In 1979 and 1980, a similar move saw silver surge from $6 to $50 in less than a year. These weren't slow climbs, they were vertical breakouts that left most investors watching from the sidelines. And here's the key, this setup is even bigger. Silver has spent more than a decade coiling under resistance. The longer the base, the bigger the breakout. If silver breaks above $35, the next test is $50, its previous all-time high. And if history repeats, once 50 is breached, silver could launch toward 100 and beyond at a speed that will shock the markets. The difference this time? It's not just investors driving the rally, it's industrial shortages, supply deficits, and a collapsing paper-silver system. This is a perfect storm that the market has never seen before. The breakout isn't speculation, it's inevitability. So what happens when silver finally smashes through its last barrier? What does a world look like when silver is soaring past $50, $75, even $100 an ounce? That's what we're about to uncover.
It's an excellent question. So I'll just repeat what I already said, which is you get alternations between the stock market and gold. And again, we've seen an overlap the last 5, 7, 8 years or so. And there was an overlap in the 1960s where we know that we went off the gold standard in 1971, but before then, gold stocks functioned as gold essentially. And so if you look at the performance of gold stocks, they had this massive breakout in 1964, and that was 4 years before the S&P 500 made its secular top. Now, of course, the Dow made its secular peak in 1966. So that's really, again, gold stocks functioned as gold before 1971. So again, I mean, there's a lot of there's periods of overlap, the 40s, the 60s, in the last several years. But that aside, typically when the stock market makes its secular peak, that's when commodities and hard assets really accelerate and trend higher. And so that happened. That happened in 1968. So even though gold was fixed and it had a great run for 9 or 10 years, the gold stocks started moving in the early to mid 60s. So it was really a long bull market for precious metals. And I think that's similar to what we're going to see now, in that, you can say, well, did it start in 2016 or 2018 for gold? Eventually, when this ends, well into the next decade, maybe at the end of it, maybe in the middle, like we're going to look back and say, oh, that lasted a really long time. So yeah, there is a distinction between gold and the secular trend in the stock market. But even though there have been overlaps, it's important to know that when the stock market makes that secular peak and it's confirmed, gold and other hard assets will perform fabulously well. Now, bonds it's a great question about bonds because they're different. Their long-term cycles tend to be their cycles tend to be longer, much longer than stocks. And we've seen that in that the last bull for bonds was from 1982 to 2020. And I use my secular indicator is I use an 80-month moving average for the total return for bonds, or the total real return. I can't quite remember. But seeing this 80-month moving average in the chart, like you can see that broke in 1965, and it also broke in 2020. And it's clear looking at, over.
The technical setup for silver is reaching a critical inflection point, and once the final resistance is broken, there will be no turning back. Silver has been suppressed for over a decade, but the moment it clears key price levels, the move to $100 could happen faster than anyone expects. Right now, silver is testing multi-year resistance around 30. This price level has acted as a ceiling since the 2011 highs, with every rally being turned back before it could truly break out. But this time, things are different. The forces driving silver are stronger than ever, and the pressure is building to a point where suppression will no longer hold. Historically, silver's most explosive moves have always started with a technical breakout. In 2010-2011, silver broke above long-term resistance around $20, and within months, it had rocketed to nearly $50. In 1979 and 1980, a similar move saw silver surge from $6 to $50 in less than a year. These weren't slow climbs, they were vertical breakouts that left most investors watching from the sidelines. And here's the key, this setup is even bigger. Silver has spent more than a decade coiling under resistance. The longer the base, the bigger the breakout. If silver breaks above $35, the next test is $50, its previous all-time high. And if history repeats, once 50 is breached, silver could launch toward 100 and beyond at a speed that will shock the markets. The difference this time? It's not just investors driving the rally, it's industrial shortages, supply deficits, and a collapsing paper-silver system. This is a perfect storm that the market has never seen before. The breakout isn't speculation, it's inevitability. So what happens when silver finally smashes through its last barrier? What does a world look like when silver is soaring past $50, $75, even $100 an ounce? That's what we're about to uncover.
It has been trending higher in favor of gold, but you can look at the last 10 years and you see, okay, there's a base here, and that hasn't broken out yet. But as we are speaking, again, in the last week or two, gold is now breaking out against that, that chart, that indicator. It's clearly broken out on a daily and weekly basis. And so in layman's terms, what that tells us is money or capital is now moving out of conventional assets, stocks and bonds, at a more rapid pace in favor of gold. It's going into gold. Because if we think about the last 8 or 9 years or 5 or 6 years, yes, the price of gold's gone up, the price of silver's gone up, but it hasn't felt like a real bull market. And that's because the stock market has still been in a secular bull. So people have still been buying stocks. And up until 2022, they were still buying bonds. So gold has been crushing bonds in the last couple of years, but it hasn't outperformed stocks yet. And that's why that 60-40, that gold against the 60-40 had not broken out yet. I mean, it was being held back by the strength in stocks. But again, it's really fortuitous that we're talking right now because we don't have to talk in hypotheticals. I mean, the interviews I was doing months ago and a year or two ago, it's like, well, if this and, waiting for gold, once it does this and it breaks out. And, I was talking about this for 2, 3, 4, 5 years ago, and people in the comments, they were saying, oh yeah, whatever, I've been hearing this forever. He keeps saying the same thing. So it's so nice to be doing an interview right when it's actually happening. And so again, in layman's terms, that just means this is the start of capital moving out of conventional assets and mostly stocks at this point, because it's already happened in bonds for a couple of years. So capital is moving out of conventional assets and it's moving into gold. And this is something that's going to last at least for a decade. So this is a 50,000 foot view. And the more capital that comes into precious metals, that is going to spill over more so into the gold stocks and especially silver. So you can hear the excitement in my voice because this is so critical and it's so exciting for precious metals, what is happening and basically what is being confirmed in the last week or two. So again, I don't want to belabor the point, but it's just excellent timing for what we're talking about.
We are now entering uncharted territory. Once silver breaks past $50, history tells us that it won't just rise. It will go parabolic. The supply shortages, the industrial demand, the collapse of the paper-silver system, all of it will converge, creating a buying frenzy unlike anything we've ever seen. But how high can silver actually go? Let's break it down. In previous silver bull markets, once resistance was shattered, the price moved with explosive speed. In 1980, silver soared nearly tenfold in just a few years. In 2011, it quadrupled before manipulation and market intervention slowed the rise. But this time, the setup is even stronger. First, inflation-adjusted prices tell us that silver is still massively undervalued. If we adjust silver's 1980 peak of 50 for inflation, it would be worth well over 150 an ounce today. And that's before considering the extreme supply deficits, skyrocketing industrial demand, and the flood of investment capital that is about to enter the market. Second, the gold-to-silver ratio is screaming for a revaluation. If gold rises to $3,000 or even $5,000, which many analysts believe is inevitable in this cycle, and the historical gold-to-silver ratio corrects to its long-term average of 30.1, silver would be priced at $100 and $150 an ounce. If the ratio overcorrects, as it has in past cycles, silver could push even higher. And finally, the moment silver breaks the system, the suppression game is over. The COMEX paper silver market, which has controlled prices for decades, is running out of physical silver to deliver. When the short squeeze triggers and investors demand real metal, prices could gap up violently, catching everyone off guard. We've seen this play out before, just not at this scale. The moment silver crosses 50 to, every technical trader, hedge fund, and institutional investor who has been waiting on the sidelines will pile in all at once. That's when things get out of control. So now there's only one thing left to ask. Are you ready? Because once silver starts this run, there will be no stopping it.
Yeah, I can talk a little bit about that. It's not my expertise, but I know how important it is, which is why I had my buddy Vince Lancy write a chapter on de-dollarization. So it's important that people know that it's not my area of expertise. But I think one thing that's interesting, I did put a chart in the first chapter where if you look at the percent of, I think it's a percent of foreign reserves that are in gold. I know, I think the person who puts it, I think he's Jan Gold on Twitter, like JAN Gold. I think that might be his handle. So I can't pronounce his last name. It's pretty long. Yeah. But no, yeah, he just puts out this really great chart where you can see the percentage of foreign central bank or foreign government, foreign central bank holdings. What percent of their reserves are in gold? And if you look at how high this was in the 70s, I don't have the numbers handy, but from the 70s until 2 or 3 years ago, it came way down, like just from a high percent all the way to a low percent. And now it's just started to move up. So there's a huge amount of room, like what we've seen governments do in foreign central banks and sovereign wealth funds, what they've started doing the last couple of years, that has to continue. And better said, it has a huge amount of room to continue because they have to keep buying gold to get back to where they were in the 1970s, the level of their reserves that are in gold. I mean, what else would you want to own? You have a secular bear market now in U.S. bonds. I mean, what else? There's uncertainty with the European Union and all that. And there's no better answer for them. And, obviously the U.S., deciding to basically confiscate the Russian reserves in the wake of their invasion for Ukraine. I mean, that was a big issue. And we're kind of seeing, I guess, geopolitically, again, totally not my expertise, but people say we're going from a unipolar to a multipolar world. And it's not unipolar. So, again, that money has to come out of U.S. financial assets, and gold is by far the best answer. And so, again, not de-dollarization, not my level of expertise, but I would say a couple things that are interesting. You go back to before 1971, where France and other countries, they saw the inflation that was happening, all the huge deficits we were running, the government spending. They they were turning in their dollars because they wanted to get gold. You could say that kind of precipitated the start of that secular bull market. And in the last few years, you could say similarly, the central bank buying, that has, and again, foreign governments, sovereign wealth funds, central banks dumping their treasuries for gold. You could say, well, that's precipitated. I mean, history will tell us, but I think in a decade, you could say, yeah, history, I mean, it kind of repeated itself the way it did at the end of the 1960s. So that's interesting. But I'll just conclude by saying the chart in chapter 1 of my book, it's towards the end. That to me is what you need to understand about de-dollarization. Like people smarter than me will tell you what's going on. But when you look at that chart and see how much room they have to continue to add gold, that's why they're going to, that demand is going to stay at current levels or maybe even increase at some point.
The greatest bull market in silver's history has begun, and those who recognize it now will be the ones who stand to benefit the most. We've seen the patterns, we've analyzed the signals, and we've broken down the macroeconomic forces driving this rally. The pieces are all in place. Gold has already broken out, leading the way for silver to follow. Industrial demand is surging, with silver shortages becoming unavoidable. The supply deficit is deepening, with mining production unable to keep up. The gold-to-silver ratio is stretched, signaling a violent correction in silver's favor. The short squeeze is coming, and when it triggers, silver could move at blistering speed. Technical resistance is breaking down, and once silver clears $50, there will be nothing holding it back from a run to $100 and beyond. This isn't speculation, it's simple market mechanics. When supply can't meet demand, prices surge. When capital shifts from traditional assets to hard money, silver wins. And when history repeats itself, silver doesn't just rise, it explodes. The question now isn't if silver is going to break out. The question is when. And when it does, it will happen so fast that those who hesitate will be left chasing the price as it soars. So, what's your move? Will you wait for the headlines to tell you silver has broken out? Or will you be ahead of the curve, positioning yourself before the rest of the market wakes up? The choice is yours, but time is running out. If you found this discussion valuable, make sure to subscribe so you don't miss critical updates on silver's historic breakout. And remember, this is not financial advice. Always do your own research and consult a professional before making any financial decisions.
Happen in like a year or 15 months. So that will be really, really explosive. That's why silver is setting up so beautifully, because it has this monstrous base going back 45 years or 46 years at this point. And I mean, we saw what happened with gold broke out of a 13-year base. So it was 2,100 a year ago, and we're ticking 3,000 today. That's almost a 50% move in a little over a year. So again, and you look at the other commodities, what copper and oil did, breaking out of their bases. This is an even bigger and longer base for silver. And so basically, if we exclude the breakout of commodity prices in 1971, 72, if we exclude that, then silver breaking above 50 will be the biggest breakout of all time. So this will be in technical analysis textbooks in 10, 20, and 30 years. They'll be talking about gold breaking out of its cup and handle and silver breaking out of just this half-century long massive base. So yes, silver will get really exciting, but you're going to have a lot of volatility there. Like it's not going to go to 50 to 100 in a straight line. I know a lot of people, even people much smarter than me, they've been talking about silver, the value there. We're getting much closer to that point where it's really going to rip and roar. And so what people should watch for, look at 35, look at $37, look at the monthly and quarterly closes. So we got a couple weeks left, and then not only do we get a new monthly close, we get a new quarterly close. So people should, again, watch the monthly and quarterly closes, $35 and $37. Those are the key levels. If we see silver pulling away from 37 and 38 bucks, that's a sign that it's starting to rev its engine, and it's going to be able to keep moving because there's such limited resistance from 38 to 50.
Silver is standing on the edge of the most explosive bull run in history, and almost no one is ready for it. Experts like Roy-Byrne are sounding the alarm. This isn't just another price surge, this is a historic breakout that could send silver soaring past $100 an ounce. Think about it. Every time silver has approached its all-time highs, it hasn't just climbed, it has erupted. In 1980, silver rocketed from under $6 to nearly $50 in just months. In 2011, it did the same, surging from $9 to nearly $50. But this time, something even bigger is happening. The forces aligning behind silver right now are unlike anything we've ever seen. Gold has already confirmed its breakout. Inflation is spiraling out of control, and institutional money is shifting away from stocks and bonds into hard assets. But here's the real kicker. Silver isn't just being driven by investors anymore. It's now a critical industrial metal in a world that's scrambling for supply. We are witnessing a perfect storm. The technicals, the fundamentals, and the macroeconomic backdrop are all pointing to the same conclusion. Silver is about to skyrocket. So what's driving this unprecedented breakout? And why do analysts believe silver's move to $100 isn't just possible? It's inevitable. Stay with me, because by the end of this, you'll see exactly why we are standing at the start of the greatest bull market in precious metals history.
For silver, if we're looking at long-term charts, monthly and quarterly charts, the $35, $37 levels in silver, that is very significant resistance. And so with respect to when silver will outperform gold, I tend to think, from what I've been looking at, I think when it gets to 40 or it kind of makes that move to 50, that I think that could be when it starts to outperform in earnest. But maybe I mean I don't have the ratio handy, but maybe when it bottomed, if you're doing it from silver divided by gold, maybe when the ratio bottomed a couple weeks ago, perhaps that's going to mark a real significant bottom. But on the other side, if we're likely to have a recession, and so there could be some point during the recession where silver sells off a lot relative to gold, maybe from a much higher level than what we're at now. Like I don't know, maybe silver runs to 50 and then the recession decline, it comes back to 37 or 38, like something like that could happen. But generally, if I'm going back, the way I'm looking at silver, okay, if it can get above 37, 38, it has very limited resistance from there up until 50. And so that's, I think, when you can see bigger moves. And if silver's not outperforming gold, that's probably the point when you'll start to see it outperform gold to a higher degree. And obviously when it breaks 50, I mean, it's at that point, it's going to crush gold. And I looked at historical breakouts, like in the mid 2000s, copper broke out of like a 28-year base. Oil broke out of, I think it was a 24 or 25-year base. And after those breakouts, I mean, they had huge moves in a short amount of time. So that's what's exciting about silver, is when it moves above 50, I mean, this thing is going to fly to 100. I mean, it can.
Silver has always been gold's shadow, trailing behind, moving slower. But when it finally wakes up, it doesn't just rise, it erupts. This pattern has repeated throughout history, and right now all the signs are flashing for it to happen again. Look back at 1980, gold was soaring, and silver, it went parabolic, surging from under $6,000 to nearly $50 in a matter of months. Then in 2011, gold broke past $1,900, and silver followed suit, rocketing from just $9 to nearly $50 again, delivering gains of over 400% in just a few years. Each time, the same setup occurred. Gold moved first, silver lagged behind, and then, once the breakout was confirmed, silver exploded with a ferocity that stunned the market. Right now, we're seeing history set up to repeat itself. Gold has already broken out, pushing into new highs, but silver, it's still sitting far below its previous peak. This kind of suppressed price action has always preceded silver's biggest moves. And here's the key. Silver doesn't just follow gold, it overcompensates. It moves with an amplified force, outpacing gold's percentage gains dramatically once the bull market is underway. The mainstream media isn't talking about it. Most investors aren't seeing it. But those who study history, those who understand market cycles, know exactly what's coming. And when silver moves, it moves fast. But this time, it's not just gold leading the way. There's something even more powerful driving silver's next surge: the Industrial Revolution that is creating unprecedented demand.
Yes, and also we may get to a point, and maybe it's not that far off, but we all know about Doge, and they're trying to cut spending, even though it's really they're not having a big impact, because you really would have to cut things like defense and entitlements. I mean, that's most of the spending. as is interest on the debt, which I talk about in my book. I mean, that's picked up and accelerated in the last 2 or 3 years, just a significant acceleration there. And so the only way to get our debt under control at some point in the next few years, we might have to do yield curve control where they just buy long-term bonds and they keep the interest rate on the long-term bonds at, I don't know, 4% or 5% or whatever. But that of course will, you'll get even more selling of bonds by foreigners and foreign governments and central banks and sovereign wealth funds and, all those people with just really huge amounts of money, huge amounts of capital. And so, I mean, that's what I foresee. And that's, and this is, not my, this is not my expertise, but, at some point, maybe will the Fed and the Fed just have to buy all the bonds like the Bank of Japan did? I mean, I think we're just, because if you look at the numbers, look at the way interest on the debt is accelerating, I think that's what it's coming to at some point where, they'll have to fix the price of long-term bonds for a certain period. And we did that from 42 to 51, or maybe it was 1944 to 51, where basically they did yield curve control where they set I think it was the 10-year at, I think it was 2.5%, something like that. So I think if you just look at the math, like, it's unavoidable. We'll have to see a repeat of something like that. So I don't know, maybe if people still hold bonds on paper, you'll be getting your interest, but you can see crazy inflation, or not even crazy inflation, but just the levels that we saw in the 1940s, where from 42 to 51, it was maybe from that period, it averaged like 6%, which doesn't sound like a lot, but if you average 6% a year for 8 or 10 years, that's really adding up fast.
Silver isn't just a precious metal, it's an industrial powerhouse. And right now, demand is accelerating at a speed the market simply isn't prepared for. The world is shifting toward green energy, advanced technology, and high-efficiency electronics. And at the core of this transformation is silver. Unlike gold, which is primarily a monetary metal, silver is essential to industries that are growing exponentially. Let's break it down. The solar industry alone accounts for nearly 20% of global silver demand, and that number is only climbing. Governments worldwide are pouring billions into renewable energy, with mandates for net zero carbon emissions pushing solar panel production into overdrive. And here's where it gets interesting. Silver's role in solar panels isn't just important, it's irreplaceable. Unlike other metals, silver has no viable substitute in high-efficiency photovoltaic cells, meaning that as demand for solar energy surges, so does the need for silver. But it doesn't stop there. Electric vehicles, EVs, are another silver-hungry industry growing at an unprecedented rate. Every EV on the road requires significantly more silver than a traditional gasoline-powered car. By 2030, EV production is expected to triple, creating another massive drain on the silver supply. Then there's 5G technology, high-tech medical devices, and even the aerospace industry, all of them relying on silver's unmatched conductivity and durability. The industrial demand for silver is growing at a pace that mines cannot keep up with, and this is where things get critical. Unlike past silver bull markets, where price action was driven primarily by investors, this time, silver is facing a double squeeze, one from investment demand and one from industrial consumption. This is a setup for a supply shock unlike anything we've seen before. And that brings us to the next major factor in silver's explosive setup, the supply crunch that could send prices skyrocketing.
Same time, if you look at gold against the stock market, gold against the S&P, that peaked in 1980, I think like 7x or 8x. And there's been other peaks in the last 125 or 150 years that have been around 4x, 5x. I mean, the S&P, I haven't checked it, because I mostly follow precious metals, or I don't look at the what is it, 5,500 or something like close to, just take 6,000 times 4. That puts you at like basically 25,000 for a future price of gold. And for silver, we know, again, you look at the last 125 years, there's like 3 or 4 times where the gold silver ratio has come down to 15, 16x. So that's, we have a future where a silver is going to 4 digits. I mean, gold is easily going to 5 digits. So that That's what we're going to see in the next decade. Clearly right now we're in a cyclical bull market. I don't know, maybe it runs for 2, 3, 4 more years, maybe even 5 more years. And then you get a cyclical bear market where, gold could go down 30 or 40% again. Silver could go down 60%, because that's the nature of a bear during a cyclical bull in precious metals. Now, that sounds really nasty or terrible, but that would be coming from much, much higher levels. Mm-hmm. For the cyclical bull for gold, this may not peak until it gets to your 7,000, 8,000, something like that in the next 3 to 5 years. Like this could be the first run. Then you have a bear market, and then you kind of have the next wave into the 2030s. And I think for this cyclical bull, I think silver will reach 100 and go above it. So we are, we're in the early stages of a cyclical bull, a really, really significant one. I think it could run for another 3 or 4 years or so. That's what people have to look forward to. And there, of course, will be a lot of volatility along the way. And those price targets I mentioned for gold and silver, the important point I should also mention, it doesn't mean gold and silver will stay at those prices. If gold's going to peak at 30 or 50,000, and we're not back on a gold standard after that, the eventual crash, it'll come back, 50% or 70% or whatever. But that's from, really, really high levels.
Silver's demand is surging, but here's the real problem. There simply isn't enough supply to meet it. The world is sleepwalking into a silver shortage, and once the market wakes up, the price shock could be historic. For the past 4 consecutive years, the silver market has been running a supply deficit, meaning more silver is being consumed than is being mined. In 2022 alone, the deficit was over 237 million ounces, one of the largest in history. And yet, most investors have no idea this is happening. They hear about gold reserves, oil shortages, even lithium supply issues. But silver? It's being drained from vaults at an alarming rate, and no one is talking about it. Silver mining production has been declining for years. Unlike gold, which is mined primarily for investment purposes, over 70% of silver production comes as a byproduct of mining for other metals like copper, lead, and zinc. That means even if silver demand skyrockets, miners can't just ramp up production overnight because they're not mining silver directly. Then there's the issue of scrap silver recycling, which has also failed to keep up. Unlike gold, which is almost always recovered and reused, silver is often discarded in industrial waste, trapped in old solar panels, electronic components, and medical devices, making it nearly impossible to recover at scale. And this is where things get dangerous. Governments, central banks, and institutional investors are quietly accumulating gold, but silver? Silver inventories are vanishing. The London Bullion Market Association, LBMA, and COMEX have seen their silver stockpiles decline dramatically over the past few years. If this trend continues, and all signs suggest it will, silver's availability in the open market could collapse overnight. A tightening supply, record industrial demand, and a historically undervalued price. This is the perfect setup for an explosive silver rally. But there's one more key indicator flashing bright red, a signal that has historically predicted every major silver breakout. The gold-to-silver ratio is sending a clear message, and if history is any guide, silver's next move is going to be violent.
Well, a secular bull market. I'll step back and say, if you look, I'm not a big cycles guy, but it's really interesting how if you look at long-term inflation cycles and cycles of commodity prices, they tend to peak every 30 years. And there's a massive peak, like a real significant peak every 60 years. And so if you look at the 30-year peaks going back to, 1920, after a pandemic, you had that peak. 1951 was a peak in commodity prices. 1980, a very significant peak. 2011. And so 2040 is shaping up to be a real significant peak based on that 60-year cycle. You go back to the Civil War, there was a peak in commodity prices. in, well, I don't know, 1863, 1864. You had that peak, you had 1920, then you had 1980. So it's setting us up for 2040 or around that point. So the inflation cycle and commodity cycle that we're in, it's just getting started. So I think, for people who are investing in hard assets, gold, silver, energy stocks, I mean, you're going to have this historical bull market, this historical secular bull market that I think for commodity prices in other commodities, like that can last towards 2040, whereas gold's a little different, because if we have some huge blow off in gold, before 2040, that could be it. The government might have to reinstitute some kind of a gold standard or something like that. So that's why in the book, like at the end when I make predictions, I'm a little conflicted. Like, do we have another 10 years left in gold, or do we have another 15 years? So I'm not really sure. But stepping back, I think the cycle of inflation in other commodity prices, I think that can definitely run towards the end of the decade. And, unfortunately, it's not going to be good for society and most people. So I'm really worried about that. And I'm not someone who was worried about it before, but it's just natural to see where the price of gold and silver and other commodities could go. And they're going to go much higher. If you look at the math, look at our monetary base, and historically, the amount of gold that we have, or that we had, the gold price, based on the gold we had, the gold price hit a percent where the gold that we had would have backed 100% or more than 100% of the monetary base. So that happened in the 1930s and 1980. And
If there's one signal that has consistently predicted massive silver breakouts, it's the gold to silver ratio, and right now it's flashing one of the biggest buy signals in history. The gold to silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, when this ratio gets extremely high, it signals that silver is severely undervalued relative to gold. And when it corrects, silver doesn't just rise, it explodes. Let's look at history. In 1980, when silver hit its all-time high of 50, the gold-to-silver ratio collapsed from 35.1 to 16.1, triggering a parabolic silver rally. In 2011, as silver surged to $50 again, the ratio dropped from over 80.1 to 31.1. Now, the ratio has been hovering around 80 to 90.1, meaning silver is just as undervalued today as it was before its biggest breakouts. And here's why that matters. Every time the gold-to-silver ratio has hit these extreme levels, a violent correction has followed, and silver has always been the biggest beneficiary. If gold continues to rise and the ratio simply returns to its historic average of 50.1, silver would already be looking at a move past 50 an ounce. But if it overcorrects, as it has in past bull markets, silver at $100 isn't just possible, it's a mathematical inevitability. But this isn't just about historical trends. Right now, gold has already broken out, and capital is beginning to shift. When the floodgates open, the silver market is so tiny compared to gold that even a small percentage of that capital flowing in could send silver's price soaring faster than anyone expects. The stage is set. The ratio is stretched to historic extremes. And now there's another factor that could accelerate silver's rise even further: the coming short squeeze that could ignite the market overnight.